Hey everyone, it's Ashwin Joshi from ATFA Academy, and today we are going further into the stock market and we're going to be talking about funds and talk about how these funds in the stock market, like mutual funds, index funds, and how funds in general can help you enjoy the gains of the market without having to do any of the work essentially, except just putting investments in. And as I said the averages of these mutual funds are like 10% every year and they compound and compound and compound. And it's just a great way to build your investment without having to do any work. If you're like me who loves the stock market and like how I learned fundamental and technical stock analysis, more power to you. Continue to use our videos and feel free to contact our team and we'll give you specialized coaching so that you can help further yourself down that path. But if you're just like, nah, I want to go down an easier route, uh, not really having to worry about sort of dealing with the market and everything and just want someone else to manage the fund, which is what you're doing when you're investing in a fund. There's going to be some professional. It depends which type of fund you invest in, whether that person will be actively managing or passively, but regardless, there will always be a professional who's managing that fund or a team of professionals. So without further ado, let's get into the first question. And I just want to say, all of this is available to you guys. All you have to do is make an account and enroll in our stock market course so you could also learn about reaching your maximum potential. So, the Dow Jones Industrial Average is an index of 30 American companies. Why is the Dow Jones Industrial Average important? Okay, so what I want you to think, don't even look at the options. Think about, I want you to think like a businessman or a businesswoman. uh, I can get one flower, or I can get multiple flowers. Now, don't mind my drawing, but I can get a bouquet of flowers. There you go. The good thing I'm in finance, not an artist. There you go. All right. So I want you to think about it like this. So we have diversification here, multiple different types of flowers. Let's put speckled ones. Let's put a circle. How about a square? So different types of flowers. Or I can just get one flower. So this is great and all, if I knew I picked the purest and the best flower, that and then sure, maybe this flower could be better than all the other flowers. But especially in economic times like this, the chances of this flower dying are so high. And if this flower dies, then I have no flowers. That makes me sad. But if there's a bouquet of flowers, and one flower dies, I still have three flowers. So that means that I'll be happy. So when you have more sort of flowers, or in this case, stalks, to pull from, then you can make better decisions based on the economy and how the stock market in general is doing because we have more stocks. Because one stock can be bad and then I have no flowers. But if I have multiple flowers and if one flower dies, then I still have the three flowers, so I know things are still good. But if I only have one flower, then I'll know things are bad. So, looking at the options, why this is important is because this is 30 different companies. I can already tell that it sort of lets us know of how the economy and the stock market is doing. And conveniently, that's one of our answer choices. But first, always read the rest of the choices. So it helps economists predict when a stock market crash will happen. Well, it could, but it's still only an index, so it can't. That's not the best answer. It provides a snapshot of how the stock market and the U.S. economy is doing. This is more of a better answer, but we read all the options. It tells Americans how many jobs are out there. Nope. It tells Americans how much debt the country's in. Definitely not. So that leaves us only with B. Alright. Next question. Index funds are important because of passage management. Definitely, there's multiple things that make index funds important, like the diversification and all, but passive management is one of the biggest. So when you think of passive, I think automatically of calm. Calm decisions, very, very chilled back, and that's the same thing. When That's the difference between a mutual fund and an index fund. One big difference. There's multiple differences, but for this case, the difference is that while mutual funds will have someone who's sort of an actively managing. So that means they're like looking at looking at it constantly, managing the fund, and much more involved. But that leads to when it's active, because that person spending more time equals more 1 minute equals more management fees. And we don't want more management fees. I mean, if you want someone who's actively looking at the fund and all, that's up to you. But the best thing I can do is what would you want more? Do you want to pay lower fees and so that you can get more of your return? Or do you feel like there needs to be someone who's actively watching so you have more trust that the fund will continue to do better? So that's the thing about investing and all. Everyone has different perspectives. And that's kind of what makes investing great because everyone will have a unique strategy. The best thing you can do is take the knowledge and then make the best decision after that for you. So, because in passive management, that's index funds. So that means lower management fees. So we like that. Lower management fees. So that makes us happy. So automatically we know this is true. Alright, carrying on to the next one. What type of mutual fund would be most appropriate for an investor who's interested in investing in healthcare stocks? Okay, this is a good one. All right, there's multiple types of funds. As you can see here, we have our balance fund, which is going to be stocks and bonds. Regional fund has nothing to do with this. We have the industry fund. This is a good potential answer because it involves multiple, it's implied, involves multiple industries. We'll just say industries. It's literally in the name. So like it will have multiple different sectors like real estate, business, and everything else, healthcare. I might have given away the answer, but anyways, so global stock fund, it also has nothing to do with it because that's talking more about the world and everything, like investing from global companies and all. So really isn't as applicational, isn't the best for this investor who wants to invest in healthcare stocks. So it can't be stocks and bonds. So our only choice is the industry fund. And that's because it involves multiple industries, and that industry can be the health sector. So that would make it the right answer. There we go. Three so far. And now we're going to what type of mutual fund would be most appropriate for a person who wants to invest in stocks from around the world. So we already just went over it. We know it's not balanced fund, regional fund, and we know it's not global bond fund because we know that because we're smart investors, we know bonds are government and stocks are in the stock market. So we see the stocks right here and we automatically know that it's going to be the global stock fund. There we go. And now we go on to the next question. So, how do mutual funds make money for their investors? This one is, as I said, it's a fund of multiple companies. So, they pay dividends. But you also get, that's a good thing about investing in these funds. You get both dividends, which are payments that are just made for holding the stocks, and you get to see if you chose right and you did diligent investing, like we teach in ATFA, then you'll see your investment go up too, and you get to enjoy both. You're killing two birds with one stone. So there we go. We know the answer is A. It wasn't working for a second, but it's all right. And most mutual fund companies offer several different types of funds. And we automatically know that this is going to be true because mutual fund companies, they don't have just one specific type of fund, they have multiple funds. Part of being having a financial mindset is being able to piece together things and sort of think of it from a business owner type of view. Think about it, if you were running a mutual fund company, you would never ever just want to have one fund. You'd want to have multiple varieties because think about it, if in the supermarket if there was only one type of vegetable, people would be mad. So try to the point of these questions and stuff, it's not trying to memorize it, it's trying to think financially smart, because that's what we try to do in ATFA, teach you the necessary skills to make smart financial decisions so you can be prepared for the real world. And that's what, if you try to take that mindset, then it will take you so far in life. So I think that wraps up our video. I want to keep it 10 minutes or less, so I think you can answer the rest of the questions. You guys are professionals, and I know that you all have the capabilities to become financially smart. So thank you so much once again, and I'll see you all on the next one.